essentially the tax and NI rates that have been in place for probably at least a couple of years and have been due to be froze for maybe 3 years have been extended to 2031. So we've got another sort of 5 years on top of the end of this tax year. So obviously that is officially complying with their manifesto of not increasing tax, but obviously the inflationary increases on everybody's pay over time will increase the tax and NI bills organically. So there'll be a larger proportion of your bill is covered by tax and NI because the personal allowance is not increasing and the basic rate band's not increasing. So the bigger impact is going to be people that's moving up to following bands. So people who are a basic rate taxpayer and who pushed it up into a higher rate will obviously feel more pain.
That's just over the 50,000.
Over 50,000. That's it, yeah. And there are obviously other tax bands. It may be that you're in 100,000, you go above the 100, you start paying at the 60% band, you lose other perks as well. So it's that sort of fiscal drag that can push your pay up, but obviously the rates aren't moving at the same speed, which people will obviously feel. And I think the forecasts are saying it's going to be worth tens of billions essentially over the term. So it's probably the biggest money spinner, but they're spinning it as it's just a freeze. Nothing's going to change, but we all know it will.
So what we're saying there is someone who's on, like, say, £40,000, they're going to get an inflation increase each year of 4%. But inflation is obviously, if someone who's on 40 grand got an inflationary increase in line with inflation, that 40 grand plus 4%, let's say, will buy them less.
Yeah.
Because everything's gone up by 4%, but except for the tax bands and the tax rates essentially. So that they're going to feel that knock-on effect of the freezing of these bands. Like I say, so it's going to be closing in on 10 years potentially that they'll have been frozen for.
Yeah, quite probably. Yeah. A significant period, and even before that, they've probably not changed a lot. But we've just had a massive freeze for years. From the business aspect, rather than from an individual's, as of the last budget, the employer's NI limit was reduced from, I think it was about 9,000 down to 5. Rachel Reeves has announced that that 5,000 limit is going to remain again until 2031, rather than being index linked, which it traditionally would be. The employer's NI rate in the last budget went up from 13.8% to 15%. So again, that's fixed in this parliament. So again, as employees' wages are increasing, and traditionally the thresholds are increasing, because that's not keeping pace, the employers and I are 15% and employer pension, which is usually 3%, maybe more, that is essentially an extra charge on top of every pay rise. So you've not just got to factor in the extra £2,000 a year. It's the £2,000 a year plus the employers and I and plus the pension as well. So it's getting more and more expensive on the presumption that probably some or most of you may have already used your employment allowance because of the rates increasing.
Okay, so on that one then, I suppose they did that damage last year, didn't they? Really?
Yeah.
So I suppose it is a more benefit that the tax free. I know it's not. It's just further.
The rates are baked in.
Yeah.
And the grants are not increasing. So years gone by, the employment allowance grant was increasing over time, and it had a big jump when they brought the last policy in. Obviously now that's not going to change for 5-6 years, whatever it may be. And obviously the inflationary increase on wages, the employment costs are going to balloon, and obviously the reliefs are fixed. So employers are going to feel a squeeze, and they'll be obviously pressured to increase prices.
I mean, if you just look at that chart at the bottom, so that's the salary amount, isn't it?
Yeah. Based purely on minimum wage rates.
So you've got national insurance on top of that, plus pension as well. So the cost to employ an individual full time at 40 hours. So not everyone does it 40 hours, but like you say, you're closing in on £30,000 to employ someone full time, which is a huge change over the last few years for sure.
Yeah. And then when you lump in the NI costs and the pension and everything else, plus other costs of administering the staff, it's just, you can see why more people are put off. And I suppose the final thing to mention then is, so student loans, the threshold's been frozen for student loans until 2030. This is for Plan 2 student loans, which has currently got the highest threshold. But just doing some basic maths on the sort of 21 plus age limit for minimum wage, if that increases by about 4% per annum, by the time we get to the 2030 tax year, the minimum wage will be at or above that level. So essentially, everybody who works full time pretty much will be paying some of the student loan back. Whereas traditionally it was you'll only repay it if you're earning a good wage. Now it will be everybody pays it. Some will pay more than others because it's 9% of whatever you earn above the band.
Yeah, I've just put it into a quick calculator, and so to pay someone £26,508 is looking like 30,500. So it's over the 30k mark. So
Yeah, terrifying.